like you've let me.
Welcome, everyone. Hopefully we can be doing this properly. I'm Gordon Scott. We're going to talk about which stock and FX pair and cryptocurrency to trade starting Monday, October 18th. Okay, so let me share my screen. We'll get right to it. Let's see. I think that's going to be the right one. Hopefully you can see my screen of the comparison between the NASDAQ and the Aussie Yen. We all good for that? Hope so. It says you are screen sharing, so we're going to go with that. Oh, thanks, Evan. Okay. All right, so here we are. Since the weekend turned, you've got the NASDAQ and the Aussie Yen doing the same thing. They both sort of jump up a little bit, and then they've been drifting lower ever since. Just here in the last couple hours, the NASDAQ has kind of rebounded a little bit, gets to the VWAP line. This is the VWAP anchored to the beginning of the week. The Aussie Yen still pushing lower. So that's kind of an interesting thing. See, I over the weekend, I sent in that recording of what I thought was going on, and I noticed that the Aussie Yen and the NASDAQ over the past 2 or 3 months have not been as highly correlated as they have been in the past, but they look like they're starting to come back into that correlation. And we've seen that over the past 3 weekends, how they basically, were doing the opposite, right? But one would end up following the other once the market opened. Well, now they're kind of following each other, except just right here at the last couple hours, there may be a little bit of divergence. I think, however, they're going to be more correlated than they've been in the past, which means if they're both going down, they're both probably going to continue to go down. Of course, unless they both turn up. But as you can see here, the NASDAQ's going up and the Aussie Yen's still going down. I think the NASDAQ's going to find its way turning down. Now, I don't think we're in for a big sell-off. I think that there's just going to be a little bit of profit taking. It's Monday morning. People woke up from, oh, wow, I had a great weekend. And Friday was fantastic because, markets were moving up. But there's still those portfolio managers who need to this thing. I'm going to take that jacket off. Sorry about that. It's the wrong shade of gray for the background. Okay, there we go. There are still these portfolio managers that want to just shave off a little bit, get a little more money into cash or to save for assets or rotate them into something else. And sort of lock in the gains for an otherwise good year, 2021. And we saw that at the beginning of the quarter. We didn't see, we saw selling, not a bunch of buying, right? So why are they going to buy right now as we're, coming into earnings season? Well, one possible reason is that the past week, the financial sector turned in fantastic earnings. Everybody was way above. Now, to some extent, you expect them to, beat the number because they're engineering their earnings to look better. Nobody wants to say, we estimate we're going to have 20, but we got 19. So we're pretty close. Nobody wants to do that, right? If 20 is the estimate, man, they better hit 20, right? And hey, if you can come in at 21, if you can kind of influence and they're like, let's get these people to guess 20 or 19, and then we'll come in at 20 or 21 and we'll look great, So there's this sort of pledge factor that everybody's trying to compensate and overcompensate for, and it just, that's gamesmanship that happens like that. But the thing that's really going on is this past week, all of the gamesmanship factor got over. I mean, the results came in even better than that. And so it sort of turned the markets around, sort of turned sellers into, whoa, maybe we shouldn't be selling so much. But just wait. If, in fact, those don't just charge higher, then you will have two things happen. You'll have them say, oh, okay, good. We can raise a little more capital. We can sell some more shares. And you'll have the professional traders, the prop trading crowd, they'll get in there and start shorting, because the better move, the quicker short-term move is to the downside. At least, that would be their opinion. That's why they would start shorting, right? So I feel like that's going to kind of happen here to start the week a little bit. The question is, will it be more this week than last week? Will there be more selling at the beginning of the week than last week? And if not, if on Monday and Tuesday there's not that much selling, then you can bet that what's coming the rest of the week is some move up. Now, there's another reason that people might want to just, I want to sell some today because I want to raise cash for tomorrow, specifically Tuesday. If you have large fund managers trying to raise cash, what are they trying to raise it for? Think about this. They might want to be raising it because they believe Bitcoin really is a good idea, and they want to buy the Bitcoin ETFs that are going to become available, specifically the Pro Shares ETF for it's a Bitcoin strategy ETF, which I think means that they're going to have an algorithmic way of trading it, not short term. When we talk trading here, we talk 1 to 4 weeks or less. They are talking, 1 to 4, not 1 to 4 months, 4 to 12 months. That's trading, on an ETF basis. Regardless, BITO, I believe, is the ticker symbol that will be coming out on Tuesday. So it's like the IPO of Bitcoin as an ETF. So stock market investors. Now, some people are out there saying, what is it with these baby boomers? I mean, if you want to invest in Bitcoin, just open a Bitcoin account and go for it. No. It's not just that they're a bunch of fuddy-duddies who can't figure out the new technology. No. It's like we got our IRAs and 401ks that can be invested tax-free. Why go into Bitcoin and get nailed, right, with Coinbase and stuff? Now, hey, I have a Coinbase account. I have a Gemini account. I have, I don't do anything with the other accounts I have for Bitcoin, but for cryptocurrency. And, I have a cryptocurrency portfolio, and it's Bitcoin, it's Ethereum, it's Cardano, it's Polkadot. And I had Litecoin, but I bought that a long time ago, and, I wouldn't buy that today. So, I'm not a real out there kind of guy, but on cryptocurrency, but I do watch it, and I like the Ethereum network, and so I've got Ethereum, Cardano, and Polkadot, all three. It's like bet on all horses in the race. Let's see which one wins. And but between the two, I feel like the Ethereum network has a lot more long-term upside than Bitcoin does. And if Bitcoin's going to go higher, so is Ethereum, right? We haven't seen the Ethereum, idea proposition lose any of its shine. So if Bitcoin goes up X percent, then Ethereum's going to go X plus something percent. If cryptocurrency catches on as a true medium of exchange, if I go to the store and I use my cryptocurrency to buy and sell goods, if I go on vacation and I use cryptocurrency to, buy stuff while I'm, being a tourist, then, that kind of world, that's a lot more value than what any of the cryptocurrencies have right now, right? And so I think everybody's kind of looking forward to that world and saying, how are we going to get to that level of adoption? And if we do, then what will be the value of this? Whatever it is, it's not there now, so surely there's more to go. that's really it's all about the perception of potential growth. I mean, same story for penny stocks or unpriceable assets by any. I mean, I know every asset is unpriceable to some degree, but stuff that doesn't have valuation spreadsheets and models attached to it. It's just like, how much are you willing to pay? How much are you willing to pay? That sort of stuff. Well, okay. So they are looking at stuff, and BITO is this way of saying somebody else will algorithmically trade Bitcoin, Ethereum, or whatever. It's not a matter of I got to decide which one is the right one. It's just the whole thing, the whole cryptocurrency market and proposition. And so you put money in, and an IRA or 401k, which is self-directed, and you buy the ETF with that, then you can participate in the potential growth without having to worry about, what are they going to do on taxes? They're going to nail you when you sell it or whatever. So maybe it's not a good argument, but that's what a lot of people think, and not just individuals who have IRAs or 401ks, but registered investment advisors who are helping people trying to figure out what's the right thing to do. So because people are being advised by these guys who are also paying attention to taxes and stuff, they're going to look at this and say, well, I don't know. I don't think you should be getting into cryptocurrency in a big way until this thing comes along. And then they'll be like, well, maybe now you want to, and maybe this is a safer way to get involved because, things are looking bad. We just rotate out of it like we rotate out of anything else. So I kind of feel like there really is something to the idea of Bitcoin ETFs, and that could in fact bring more money. Well, that's exactly what the market thinks, is that more money could come. Here's the Bitcoin and Ethereum charts. Let's see, we got Ethereum not quite the same level. So Bitcoin and Ethereum, they're running up. Notice that Ethereum is just near the top, not breaking a new high, whereas Bitcoin is breaking a new high. Well, that's because the ETFs that are coming are more Bitcoin ETFs than they are other things. But to me, that just says, okay, Ethereum, you can make the case, well, Ethereum's been ahead, and so now Bitcoin's catching up. I don't know. I feel like if Bitcoin's making a new high, it just means there's the opportunity for Ethereum to go up and make a new high. If whatever value proposition or perception proposition is driving Bitcoin higher, it's going to drive Ethereum higher eventually. So I really feel like an Ethereum opportunity is pretty good. What will happen Monday today? What will happen in an hour when the market's open? Well, look, we've been here just kind of at this level with Bitcoin. Yeah, it hit 62 and then kind of came back down to 60, right? But it's sort of holding in there. So I'm kind of thinking what we'll see is a little bit of sell-off and then some buy-up. So this is equilibrium, whatever it is. The big question is, once the Bitcoin ETF opens up, will that number change? Really hard to say. No telling. My guess, though, is that even if it does come down, it's probably not going to, challenge support. What this old resistance, which became support here at about 52, 53, I doubt it's going to go much lower than that. So, I don't know. Who knows, right? But my guess is that if it were going to go lower, then it would never have gone up here in the first place. If people are willing to value this, then just because the ETFs come online doesn't mean that they're just going to give up everything. And if they were going to do that, they would have done that already. That's my thinking. And so I feel like you've got that as sort of a way to judge. If I get in here in the 60s, or I'm doing anything that's connected to Bitcoin, when Bitcoin's in the 60s, I've got to allow Bitcoin to go all the way down to, maybe 50, right? So no problem. 16.5% fluctuation. When's the last time you thought to yourself, I could buy Bitcoin and I don't have to worry about it fluctuating even 20%? When is the last time you ever thought that? You ever even heard anybody talk that way? Buy Bitcoin. Yeah, I know it's going to go up, but you got to allow for it. So hold on, just hold, right? That's what people say. Why? Because everybody knows Bitcoin goes up, makes a 75% pullback, and then goes and hits a new high, right? Whatever. So when's the last time you felt like you could make a trade with Bitcoin where you said, if I get in and I got to put up with some fluctuation, how much fluctuation can I tolerate? Worst case scenario. And the answer was 20% for Bitcoin. I mean, to me, this is just me making it up, but the mere fact that you're hearing me make it up, right? It's like, well, I think there's 20% here. I think that says something about the stability of Bitcoin's price. And if Bitcoin's price is more stable than it used to be, that means that we're, that's just evidence of how the whole thing is evolving into a more acceptable notion as a, investable asset. So we don't know what's going to happen, but in trying to guess, I think we're moving into a more acceptable area. I don't think we're going to get this huge degree of fluctuation just because the ETFs come online. I think, in fact, the ETFs might actually stabilize the pricing. That actually, when futures came on, it had a little bit of a stabilizing effect on Bitcoin because that gave people the ability to hedge. And you give people the ability to hedge, they take the asset more seriously, and then the asset kind of calms down its pricing. There still was a longer term fluctuation that happened on Bitcoin. So, that could, again, happen here. But in a period of, month, 2, 3, I think 20% is actually going to be, if it goes down lower than 20%, you want to cut it because it's going to go down much more. I think it'll hold on and not go down. I think if it does go down, then people will start buying it up because if they were going to give up the value before the ETF, after the ETF came along, if people were saying, no, I'm not going to buy Bitcoin, forget it, this is a bad idea, then they wouldn't be excited about it coming into the ETFs, So I think really there's some cryptocurrency opportunity. I like the idea of watching to see, how much it dips and then get prepared to be a buyer on cryptos. And let's see if we can just have a look quickly at, see here you've got Cardano, which doesn't look at all like either of the other two. I guess it doesn't look like Bitcoin or Ethereum. And so, if you're a contrarian, then maybe you like the idea of just, hey, I'm going to buy Cardano because it's not going to have this crazy fluctuation. Maybe that's a good idea, but I'm really of the mindset. Here, let me show you this one. This is Ethereum priced in Bitcoin. Okay, this is the past year. Ethereum not priced in US dollars, but priced in Bitcoin. Okay, and what I noticed about this chart, the reason I keep this chart around is, if in fact you get one over the other, then you can say, which one am I interested in? The fact that this is low, below its moving average, means what I was telling you before. Ethereum is underpriced compared to Bitcoin in the short term. So if they're both going to go up, Ethereum has the better growth opportunity. It always does anyway, but here, short term and tactically, that's what this is showing us. But bigger, longer term, look at this. See, we got this high and this low. And the price is just kind of in between. We're a little on the low side right now, but it's really stable. The relationship between Ethereum and Bitcoin has been stable, generally speaking, for, since May, not quite 6 months, but that's good. That's really good, because if one goes up, then the other goes up. If one goes down, then the other goes down. That means, the whole cryptocurrency market is just kind of working together. And internally, there's a little fluctuation, and right now that fluctuation favors Ethereum. So anyway, that's the whole crypto thing. Now, why crypto? Why am I talking about crypto right now? Well, because when I get to stocks, the one I want to talk about is Tesla. Tesla, everybody, the market had a good day on Friday, but Tesla had a fantastic day. See, it's like, what is going on with Tesla? Crypto is going on with Tesla. Crypto ETFs are coming, and Tesla as a company still owns a lot of Bitcoin and Dogecoin and whatever else they own, but people equate Tesla and cryptos in a certain way. Not fully. There's more to the value of a Tesla share than just the price of Bitcoin, but there's a lot of it baked in. In fact, here, let's go ahead and put Bitcoin on top of Tesla right here. And now at this scale, it's kind of hard to see it. So I'm going to break the scale apart here. Let's put this one, Bitcoin, on a new left scale. There we go. Then we can monkey with this a little bit. Now, I know that this is not the best way to, let's change these to actual prices as opposed to percentages. Okay. We'll squish down Bitcoin a little, because what I want to do here, what I want to try to show you is the correlated behavior between Bitcoin and Tesla shares. You see this? Bitcoin's going sideways to down, then all of a sudden it makes this run up, right? Tesla is not going down so much as kind of sideways. This one here, Tesla leaves these guys behind, or Bitcoin behind. But this little bit here, Bitcoin goes up, Tesla goes up. Bitcoin runs up a little bit here, Tesla runs up a little bit. Bitcoin heads down, Tesla starts heading down. Now, right here, something happens with Tesla and Bitcoin doesn't play along. All right. Like I said, Bitcoin's not the only thing on Tesla, right? Tesla's had this nice big run. I mean, very impressive over the past few months. And then Bitcoin makes this big move here, and Tesla's going up just a little bit behind it. So you see what I'm saying? It's like people see Bitcoin moving and Bitcoin moves. So it's like, the first move, we're not going to say, but if it keeps moving, oh, well, then let's value Tesla higher. It's like they got to roll over their spreadsheet valuations to say, okay, we can buy Tesla higher because they own all that Bitcoin. And so if in fact Bitcoin and Ethereum are going to go up, then the stock to buy is probably Tesla. And could you buy Tesla with the idea that, 20% fluctuation? You could, but I think you could probably even do better than that. Let's look at 20%. 20% is going to be $165, $170, something like that. So that's going to put you clear down to, all the way back down here. You don't need to give that much up in Tesla. No way. I mean, if you did, then you're waiting too long, right? Buy something and then hold on to it. Now, some people may say, I don't want to buy a Tesla stock with $840. There are a lot of brokerages out there that allow you to buy fractional shares. So you don't have to spend $840 a share to buy Tesla. You can put in whatever number you want. You want to buy Tesla with $20, then you get some, fractional share amount. You get $20 worth of whatever Tesla is. And Tesla goes from 800 to 1,000. Your $20 goes to $24, $25. I know that doesn't sound like much. That doesn't sound even worth doing. But it depends. It's all decimal points, right? If you look at it in terms of percentage growth, Well, it's not bad growth. So anyway, my point is Tesla is my pick for the trade this week because of all that cryptocurrency stuff. Okay. Now, Tesla also has tall range day setup, which is one of my setups that I like to use. And remember, the idea behind a tall range day trade, you look at this like, that's totally at the top. I don't want to buy, the crazy new high. I'm with you. But you'd be surprised. That has a statistically better chance of continuing to go up over the next month than the average price of any other day. So it's actually a good signal. It really is. But how are you going to buy it? Well, here's how I like to buy it. I like to look at this tall range day and say anywhere 40% of the top, bargain shop. Just buy that a little bit lower. There's like a 58% chance that the price will swing down a little bit somewhere in the next 5 days. And we're going to have a little bit of selling today, as was my thesis from looking at the futures and the Aussie Yen. Then I think you're going to be able to pick up Tesla at a lower price, right? Now, that leads me to where we were last week. I think if you recall, I said Chevron was probably your best bet for last week. Well, I don't know that it was the best bet, but in terms of safely being able to think that it's going to continue to go up, it was pretty good. The problem is the execution, right? I was like, well, let's just get it right at the open. That didn't get stopped out, so it's still not a bad idea. I mean, that is still running. In fact, if I bring up my little trading panel here, CVX compared to where I put it in right at the open last Monday, it's about break even. So I think there's still chance for it to continue up and hit the profit target at 112. So that one's just we're letting it run, right? But notice how much better it could have been. We could have been out of this trade already. We could have just, what if that wasn't exactly a tall range, although the gap and so forth was kind of there. We could have executed the same strategy and probably should have executed the same strategy. 40% down from the top of the candle would have been about right there. If I'd have bought Chevron at 107, then by Friday, it would have hit its profit target. Just saying, that would have been a great way to just make a quick trade. And that's what you like. If you're in these risk 2 to make 1 trades where you are, targeting being right 70% of the time, because the baseline statistics are, you're going to win 66% of the time. You just want that 4% edge 70% of the time, right? If in fact you're playing the game that way, then you really want to find ways to make this happen more often. So I was a little too rash in terms of the execution. I'm going to wait around. That's the cost of that poor decision, though, is extra time in having the capital tied up. So with that in mind, I want to see about the possibility of this. Yeah, this is my Tesla chart. Doing better here. Now it's possible the Tesla is just going to gap up and keep going, right? In fact, why don't we check the opening price of Tesla here? Okay, notice here this is 5-minute chart. Look what's happened. Remember how I had said I thought we were going to sell off a little bit. I thought these things were going to correlate a little bit better. I mean, so far that's playing out. We got this thing coming back down, kind of keeping up with the Aussie Yen. So the Aussie Yen and NASDAQ, they're being more correlated this week than they have been in the past 3 weeks. And that's going to be an important factor for a trade setup. Don't go away if you're interested in a Forex trade. I'm about to get there. But while we're here, the reason I came to check out this chart was just to see where is Tesla in the pre-market. What are they? Well, I'm going to go back to that because I don't want to lose that chart. Okay, come on, guys. What are we doing here? There we go. Let's do it this way. Let's just see the quote page for Tesla. Sorry, my Thinkorswim account is having recalcitrance, shall we say. Why that's happening like that. Well, going to have to find it another way. I'm going to open this up. Trading panel. Oh, actually, no, it's not the trading panel we want. It's the order panel, which is a little tough for me to get because it's off the screen. So go do this. There we are. All right. So the quote is 850 by 851. Interesting. That's and it closed at 843. So it's opening clear up here at 850. Yeah, okay. We saw this movie last week, didn't we? Right. The stock I'm trying to pick is already way up there. So I like the idea of, I mean, you know, we're looking at the NASDAQ and the Aussie Yen, and they're both trending a little lower. So I think we're going to see some sell-off. Now, it might be the case that that's not going to sell off, in which case we would just miss the trade if we didn't jump in, which is why, you know, I tend to just go ahead and jump in. It's rare that it, you know, comes away back. Yeah, so I just got an error message on my Thinkorswim thing. Oh, are we back? Yeah, okay. I'm getting an error on that platform. So what I'm suggesting is that either you make the choice, get in at 851 or so, or wait for it to come back. I think we're going to see it come back. I think we're going to see fluctuation. Will it come all the way down 40%, get clear down to 836? I'm kind of skeptical that we'll see that. But will we see 843, 840, you know, pierce the old eye? Absolutely. I think we will. So I think you target between 840 and 843. I'm going to try this by putting in a limit order, of 842. We're just going to split the difference and be a little generous. 842 is, no, I'll go 841. So it's barely into the candle. 841. All right, 841.50. Whoops. Oh, sorry. Let's go get that order. And change that. So 841.50. And we're going to put on a take profit and put on a stop loss. And the stop loss I'm interested in is all the way back to the bottom of the candle. Yeah, I think I'm going to go one more candle, 812, 810, something like that. So we're going to go $30 lower for the stop loss. And the take profit, we're going to go $15 higher. So yeah, 811 to the downside, 856 to the upside. That sounds about right. See if I can get 841 and then get up there and get 850. It's at 850 right now. 856 is, you know, exhaling for Tesla. So that's a very conservative, just quick hit kind of trade. That might be a little too close, because what I want to do is watch that and say, hey, if I think Tesla's really going to take off, right? What if Bitcoin takes off today and then it just doesn't look back on Tuesday and Tesla sort of fluctuates? I get this trade and it kind of goes up. I probably want to take the lid off. Probably want to get rid of the take profit order and let Tesla ride as long as it can. And so we'll see. But in any event, I'm going to modify this to be that. And so we're looking to try to get 841. Now, I know that's a $10 drop on Tesla, but I think there's a good chance that that could happen, in part because this thing ran up so strong. If it doesn't just gap and go, then there will be profit takers. And if it does gap and go, okay, I missed the trade, right? But that's not a trade I would have wanted to be in at this price already, and be writing it up and taking profits. So that's the Tesla trade. Now, more fun, currencies. All right. So Aussie Yen and are we still stuck here? I think we're still stuck there. Yeah, I've got to close that and try reopening that somehow. Weird. Wasn't even close. Okay. So to talk about the Euro Aussie, which I think is a real opportunity here, I've got to first talk about the US dollar, DXY. See, what's going on is the dollar, this is the 4-hour chart on the US dollar. This is the US dollar index, not the euro or whatever. So it's not the dollar priced compared to something else. It's just the dollar. I guess technically speaking, it's the dollar compared to a basket of other currencies or something, 60% of which is the euro. But people try to, what it actually is the dollar compared to some other price of the US dollar. Like 10 years ago or 5 years ago, or I don't know where they connect, but so it's the dollar compared to itself at another time. And the dollar in whatever time frame they chose has been, always relative to other currencies. So that's why I say technically it's this basket of other currencies. But for the most part, we're just going to call it the dollar index. And notice that it has been stable here since the beginning of October, just sort of back and forth. But before then, it was on the rise, right? While the dollar has been stable, we've seen other currencies rise against the dollar. Well, let's just have a quick look at the euro itself. Yeah, USD. So we've seen the euro coming down, and then see right through here this sort of sideways move. Dollar was on the rise, and then the euro stabilized. But what do we got? We got a inverse head and shoulders pattern kind of thing going on. And so this is looking like a potential reversal. The same way the dollar index is looking as a potential reversal here, sort of a triple top type thing. And if you draw a trend line, it's already broken that trend line. It's getting ready to go further down. Why would the dollar be trending lower? Inflation. Everybody keeps every other day, that's the headline du jour. Inflation, this or that. And you just look at prices. You look at the things you're buying in the stores. I don't know how it is outside of the US, but my guess is it's probably the same. You're seeing prices go higher on a variety of things because supply chain shortages are just creating that. But that is the real question. Is this all just short-term supply chain imbalance and disruption and causing temporary shortages and therefore higher prices? Or is it, labor problems, employers not willing to pay workers enough, so we don't get new workers, so we don't get new factories, and so the supply chain is happening because of the workforce problems, blah, blah, blah. I don't know. The real question is not what's happening or what's causing it. The question is this temporary or is this the new normal? Is this more permanent? See, and that's the thing. When people are talking about inflation, I think that's what the macro hedge fund and institutional fund managers are trying to figure out. Disruptions. But are those disruptions here to stay in one form or another? Yeah, we solve one and then another creates, and it's just going to continually keep going. I want to say that what this really is just still fluctuation ripples from the pandemic. So you get this pandemic and then huge overreaction, and supply shortages, and then we slowly start working our way back into it, and we go too high and then too low, and there's all sorts of disruptions, and it just takes a while for these things to sort of level themselves out. That, if that were true, that dynamic would play out if we had a free market at work, or a free-ish market. Regular market forces would do that. That's the kind of thing we'd expect. So no, supply chain issues might continue for a little while, but they're not going to persist. And if inflation is a function of just supply chain disruptions, then inflation is not likely to persist, right? That's how it would follow. The question is, the Fed and the U.S. government, so both fiscal and monetary policy, have been way more than accommodative. Back in 2009, 2010, and the post-financial crisis, the euro crisis that happened shortly after that, were all the Fed's response was, oh, well, we're going to have to do some quantitative easing. Yeah, but it'll just be temporary. Well, it's never stopped. QE, QE2, 3, 4, et cetera. And then they stopped allowing people to call it QE plus, right? So we'll come up with different names for how we put the money out. Let's keep putting the money out. Now we're talking about tapering. Okay, the mere fact that we use the word tapering means they're still spending. They're still spending, right? So the Fed and of course, the U.S. congressional budget just is crazy big and just keeps getting bigger and bigger. Not just because of the numbers get bigger, but the percentage increases. What they're spending it on. Ugh. So I worry that inflation, independent of supply chain, might still just be going, here's a simple indicator. The McDonald's Big Mac index, not McDonald's, the Big Mac index, a McDonald's burger, because it's all over the world, because their supply chains are all over the world similar. They have these general pricing things. And, what is the Big Mac index? Well, I don't know what it is today because I haven't actually checked, and it's not granular day by day. It's like quarterly at best, so it's not really a great indicator. But all I know is that just within the past 2 years, when you drive up to buy a Big Mac in a drive-through at McDonald's, the price that you're paying is not just 5 or 10% more, right? It's like approaching double to what it was just a couple of years ago. So, there's real price pressures happening, and I don't think they're temporary. I don't think that they're ever going to calm down. So what does that mean about the dollar? That means the U.S. dollar is going to face inflationary pressures, and I believe that the portfolio managers are settling into that idea. Doesn't matter why. The supply chain disruptions might continue because we've got a disrupted and inefficient and can't get back to normal market. We've got government policies from governments all over the world intervening. It's not particularly as free a market as it used to be. It's a pandemic-laden market. It's still people too worried about COVID this or variant that. Or it's that the U.S. government and the Federal Reserve are way too accommodative, and they're just going to be pumping money. Take your pick of reasons. They all lead to the same place: higher prices in U.S. dollars, lower value of the U.S. dollar. That's what that means. Inflation is going up, value of the dollar is going down. And so it's possible that what we see is dollar dropping. If dollar's dropping, euro is rising, right? So why am I interested in the euro Aussie? Well, because I think the Aussie dollar is stronger. So now remember, this is the same 4-hour chart. What did we see on the euro? We saw this big slide, and then, okay, we're going to kind of maybe turn. In the case of the Aussie, we already turned, man. Aussie is strong and going. And so if I look at the two of these, I think if the dollar is going to get weak, then the euro is going to get strong, but the Aussie might get stronger. So I think the big opportunity is to play Euro Aussie short or Australian Euro, depending on, how your broker lets you set up the trade, right? If it's Aussie Euro, then you're long. If it's Euro Aussie, then you're short. Okay. But here's what I'm seeing. Let's look at the commodity channel index, the CCI, because that's the fastest. I'm also going to put up the RSI for comparison. You'll kind of see why I like to look at the where's just the relative strength index. Too many. Okay, let's get rid of the second one there. Okay, so what we're looking at here is, it's got them both. Nice. Time period is 20. Cool. I'm going to change this to 14 because the default of the RSI is 14. I want these things to be in the same time zone or same time frame. So I'm going to make sure they're both 14. Okay. Here, this is what I was talking about. This is why I like to look for divergences on the CCI. Give me a second here. I got to get my drawing tools available. If you look at the pattern of lower lows, and compare that with the pattern of higher lows on an indicator, any indicator, right? Then that is what you call a bullish divergence, because it is going from a downward trend to a potential upward trend. Okay. So let's, there we are. So you see, when this thing breaks, that's the opportunity. Grab this and ride to the upside, right? So it's possible that for a while the euro is going to outpace the Aussie, and we've had this big downward move. So you're going to buy this thing and keep running, right? Very possible, because that is the bullish divergence. I had said over the weekend, hey, this thing, it'll come out of here, but it could go either way, up or down. In this case here, if it goes up, you put a 40 pip stop loss. Why 40 pip? Because that's the one ATR of the Euro Aussie on the 4-hour chart. So either you're right or you're wrong. You don't have to risk any more than 40 pips to find out. Well, this turned out to be pretty good, because at that break, right about there, 155, 156.50, we'll call it, we ran to 157, haven't made 157.50. I had said there was 100 pips going whichever way it breaks. 100 pips, and you only had to risk 40 pips to get it. But now that this has broken out and come out, now the thing you want to do is watch, is the Euro Aussie going to hold and continue? Will the euro continue to outpace the Aussie? If so, that's a fantastic run. I kind of think it's not going to do that. I kind of think that the Aussie is going to outpace the euro. So you've got this opportunity for a setup for going short, for a resumption of this downward trend. Because although that trend looks like it's kind of long, don't forget that's a 4-hour chart. Longer term, this has been in an uptrend, and this is just sort of the breaking to the beginning of a new, potentially, I think, longer downward trend for the Euro Aussie. Because if the if the dollar is going to keep going lower, it's true that both of those are going to continue up. So maybe the answer is buy Euro USD and buy Aussie USD. Just play the dollar weakness, right? But and then you'll have to guess which one's going to win, Euro or Aussie. So those are both good trades. I'm not gonna try to say this one is somehow better. I just kind of think that when the Euro Aussie gets going, the trend runs for so long that it's an easy grab. And so I feel like we've got a long running trend here. Persistently downward move. We're going to get a little bit of a move up, and then it's going to head on down. So I think in the week upcoming, there's going to be all these opportunities to go short Euro Aussie. That's my guess. It might be that we get up there to 157.50 before that happens, though. So, until you see 157.50, look at that right there. So you got this came down, made a dip, made a bigger dip. We get up there to 157.50 and we make a smaller dip, and then we come back up. Okay, don't listen to me. Don't go short. Go long. Inverse head and shoulders, right? But my guess is we may not even make it to 157.50. And if we don't, if we just make lower highs like we're starting to already here, then it's possible that it's more likely that this is the continuation of a longer, stronger downward trend. All right. Before I leave this chart, though, see here the CCI makes this divergence more apparent earlier than the RSI makes it. So if you're looking for divergences, CCI is the better indicator to be doing. All right. So those are a few ideas. We got about 8 minutes. And I got to see if I can get my Thinkorswim application coming up here so we can watch what will actually happen. But as I mentioned, I feel like Tesla's a good trade for starting it off with. And but the other thing to know is what else is coming in the way of earnings in the coming week. Well, the first thing to be aware of is in the U.S. stock market, you've got IBM will do earnings on the 20th. And that's not when I expected to see earnings on IBM. I thought earnings were going to be. I wonder if they changed that. That's weird. I thought I saw that they were, but regardless, the point is IBM's earnings are going to be the first look at technology sector earnings. And if, in fact, you're going to see things like Apple or Microsoft go higher and look better, then we're probably going to want to see IBM make some strength. Now, there's a weird thing to note as well. IBM tends to be, I wouldn't call it correlated, but influenced. IBM has a lot of European business, and so when the euro goes down, IBM tends to go down as well. But the euro is looking to turn, and what are we seeing on IBM? Right? Right. So this is just another indicator that the euro might have some strength, or that people are expecting it to have more continuing strength because they're pricing that into IBM. Okay. What do we got on Tesla? So Tesla is 85. Why is that not? Somehow I'm expecting to see more trade grid. Now, whoa, I'm having problems with my Thinkorswim application. Don't know what's going on there. I have to look into that. That's a bummer, because that means we're not going to get live quotes, I think, from the futures. So let's get ready to watch QQQ. in real time. We're going to go to a 1 minute chart of QQQ. That is the pre-market, 9:25. So are we 5 minutes delayed? Is that what we're seeing here? Let's see. I thought this went, pretty close to real time. Oh no, that's right. That is real time. We still got 5 minutes left. I thought we were closer. Okay. Anyway, in 5 minutes we'll come back and watch this chart and see how the market starts moving. So back to the Euro Aussie trade. Let's now take away the divergence study and bring up a comparison. How do I want to do that? Overlay or maybe a separate panel of the Aussie Yen. And that is daily. Let's change that to 4 hour. Okay. So again, reflecting the strength of the Australian dollar, and that's what that is, right? We've got this upward trend kind of coming back a little bit, right? But in the last 4 hours, rebounding. And that strength right there is corresponded with that weakness right there. Aussie Yen beating the US dollar better than, not Aussie Yen, Australian dollar beating the US dollar better than the euro is. Kind of like the Ethereum Bitcoin thing, right? if Bitcoin is the euro, Aussie dollar is Ethereum. I mean, more volatility, more beta, right? Whatever you call it. So, big thing here that I'm seeing is if the Aussie Yen continues to have this upward slant to it, then we'll probably see the Euro Aussie drop. And so I just think there's a real opportunity there. I don't know about jumping on right now, but whatever you do, whenever you decide to make your trade with the Euro Aussie, you could do look at it and see if you could find a place where 40 pips makes sense. If 40 pips makes sense, if you say, well, I want to get in right here as an example, 156, well, let's just call it 157. I want to get in at 157 short. What would I have to have in order to, set my stop loss? Well, if I wanted to set my stop loss above all that resistance, I'd actually have to go 57, maybe 60 pips, right? That's not 40 pips, so that's not my trade. If I wanted to do that, I'd have to wait until I saw, 157.10 or something like that in order to be able to go south. Because then I could have, or 157.20 rather, for a 40 pip move. Now, what if we just kind of kept going down, then came up? Well, okay, then I can anchor that as my high, and I'll just say 40 pips to it. The whole thing is on the Euro Aussie in this setup, if you can find a 40 pip move that you like, then if you're wrong, it's 40 pips. But if you're right, there's a good chance that you're going to be right 2.5 times. So that's probably the biggest reason why I like the Euro Aussie is just I feel like the setups are going to be so much better. Yes, the Aussie might win trend-wise. Yes, the Euro might still be good against the US dollar also. But I just feel like both of those are going to have a lot more noise in the trend than the Euro Aussie. So in other words, if it's going to continue the trend, it's going to be a lot less fluctuation as it gets going. And where is the trend? The trend is down. Yeah, I know we might be in a bit of a reversal. We're looking for weakness to see that trend continue. So anyway, that's the Euro Aussie trade. All right, we are within a minute now of the U.S. market open. So I'm going to come back to here. We're looking at QQQ, and we'll watch to see how the U.S. market opens. Keep in mind, if it opens by selling, then I think we'll be able to capture Tesla down around 842. Tesla's out at 841, 852, heading up. Just keeping an eye on the price there. Yeah, not looking back. And we didn't see any selling in those first few seconds. on QQQ. I mean, this move right here, that's only about 20 cents on a $360 stock. That's not a lot of, I mean, it's going up, but it's not going up in any kind of big way. There comes the selling. Is the selling more than 20 cents to the downside? Yes, it is. So we absolutely have more selling going on than buying. But is Tesla coming back to 842 or 841.50 or anything like that? It is not. So Tesla's clear up to 855. I am interested in trying to do something I almost never do, and that is chase. Yeah, it's already at 857. I don't feel like I can chase that. That's a miss. Yeah, it's a good looking move though. So let's see then how the we have the Bitcoin stuff up here still. Euro Aussie's pushing down more, right? Australian dollar having some strength. And let's check out BTC USD. What is Bitcoin doing? Interesting that we had Tesla going up strongly and Bitcoin isn't. I mean, it's just kind of holding in there. And this is more of what I expected in Bitcoin, because people, they already made their move, right? And so there's Ethereum. Notice Ethereum's come up off the little, whatever low it was making here in the past few hours. So yeah, I still hold to that idea that Ethereum's going to have the longer term, better opportunity to it. And let's go back here and look at Tesla. Okay, so Tesla took off, now selling down a little bit. This might be the place where we could get a bit of a dip, be a dip buyer, somewhere in through here, if that's going to happen. But I'm just, yeah, I only take the trades that I'm prepared to take, that I, mentally have the framework. And if I miss it, I miss it, right? So I don't feel like I can do that. I'm going to have to come back and revisit the whole Tesla thesis later on. Meanwhile, what is my, yes, so the CVX position is working now, just a little bit. Let's get out of the 1 minute here and look at the daily chart. So from last week, CVX jumping up a little bit higher, hasn't hit my profit target at 112 way up here, but I think there's a whole lot better chance to get that than it will be to get stopped out. So gonna hang around on that chart. One more, just as a quick bonus, here's the IBM chart we're talking about. IBM's got earnings coming up, and I don't think that IBM is a great buy right now, but I think that if the dollar is going to continue to get weak, and if stocks in general are going to be more attractive because they were last week, right? Then I think what you do is you buy IBM somewhere in the middle of the week. So I want to set up that trade as sort of a parting idea. And so let me show you where it's going to be. We're going to look, somewhere right in here in the 140 to 142 space. 140 is clear down here. Sorry, 141 to 142. Let's call it 142.50. Might be a little low. I don't know that we're going to get that actually. I want to be right on that low right there. 142.75-ish, we'll call it that. That's probably a buy the dip on IBM, with the idea that If earnings are good, then we're going to see it, or people respond favorably to earnings. However, I think also you got to give it some room. And so the trade is all the way down to the old low there at around 139. So we're at 142 and change and 139 and change. We call that 3.5, and then take profit would normally be $1.75, just right there at old resistance, right? But hey, it's coming earnings. If in fact earnings are good, then we're going to see the price break above that and make new highs. So I'm not going to put the order on. I'm just going to watch it. And as long as I don't get stopped out, if it gets up to $1.75, I'll consider taking the profit. But what I'm hoping is I can just raise the stop to here and let that thing keep running. But that's the trade idea. All right. Well, with those ideas in mind, hopefully you've got a few that you can take with you, whether it's cryptocurrency, Forex, or the U.S. stocks. Until we come back and talk about them all again next week, take care and trade well.